All right. Well, that's kind of small there. Let's see. There we go. Hey, you guys, Chris Franks with Texas West Capital coming at you guys live here just after 11 a.m. Central Standard Time on Wednesday, the 19th of June, 2024. Amidst all the doom and gloom that Bitcoin's dying, it's dead, it's topped out again. We're going to go through all this, right? It seems like as long as price is not going up, we've got to keep dealing with this. But of course, we're going to bring you guys the reality here. We're going to talk about it from a few different angles and let you guys know what's really going on. And so, as always, I've got Mr. Andrew and Mr. Tillman here to join me, the other two beards of Beards and Bitcoin. Good to see you guys today. How y'all doing?
Doing well.
Doing fantastic. Thanks for having us on, Chris.
Hey, man, this is our show. This is, we're here. Everybody seems to love it a lot, get a lot of great feedback, which I love to hear, because otherwise, what the hell are we doing, right?
Exactly.
Yes.
But, the big news here being Bitcoin whales sold over. Matter of fact, I think I'll probably pull this up here real quick. Yeah, right there. Bitcoin whales sold over 1 billion Bitcoin in the past 2 weeks, according to CryptoQuant. Really, the biggest part of that is the Bitcoin miners. We had the halving. Bitcoin miners are making a lot less now. I think, again, was it like three and a quarter or 3.5 Bitcoin now? Mm-hmm. And so, of course, they're going to have to sell some. A lot of them are going to have to sell some. Most of them aren't in fantastic, just flush with cash kind of thing. So they got to sell what they're mining. And what they're kind of holding there. They still hold a ton, though. That's the thing. They've been selling a bit. They still hold the ton. And other than that, of course, we had the ETFs kind of selling off here last week. If we're looking here, there's a bit of a sell-off. But at the end of the day, still insignificant compared to how much inflow they've had. But, everybody wants to focus on the here and now, recency bias, rather than what the big picture is. And so, of course, we do have the other article here saying that, Bitcoin, according to Glassnode, Bitcoin price uptrend is still intact, with holders about 120% in profit. I think it was an average of about 85 or 86%, looking at the holders there. And so, and interested in selling significantly. So, what do you guys think about that? Obviously, a big bit of sell-off here last 2 weeks, but again, short term.
I see this as a net positive across the board. Think about it this way: if we had articles and we had on-chain data associated with quote unquote whales selling $1 billion in Bitcoin 3 years ago or 4 years ago, we'd see a much more significant move in price than we're seeing now, and some context to that price. Right. So let's call it 65 right now. That's, for all intents and purposes, that's, let's call it 5 to 6% away from the previous cycle all-time high. So 69 and change. So, 5-6% away from the previous all-time high, 8 to 9% away from our current all-time high. This is concern for ants, as they say. Like, what are we talking about here? On top of that, let's take a look at the broader sort of picture here, right? Because now Bitcoin is part of a conversation associated with the movement of money inside of a much, much larger market structure in traditional markets. You and I were talking about this, Chris, before we came on. And I keep coming back and to some degree pounding the table on, we're in this period of time that's called sell in May and go away in the traditional markets. I don't know if anybody watched the traditional markets yesterday, obviously a day before a federal holiday, and the volume was absolutely anemic. I think, the up or down trend on each of the three largest markets was in the teens to the 20s, 30s. Just nothing, absolutely nothing happening. So, here's the analogy, right? So over the next 3 weeks, I would say all of your viewers should go and try and rent an Airbnb in Montauk, New York right now. They don't exist. And if you can get one, it's going to cost you $100,000 a night to stay on the beach right now, because all of Wall Street's executives are there. They're not in their offices doing transactions and generating institutional interest in whatever product that they want to generate institutional interest in, right? They're listening to David Solomon of Goldman Sachs do a DJ set, at the local lobster roll bar. Okay. So now do that same exercise and go and try and rent a place in Montauk in October. They'll almost give it to you for darn near free because nobody's there. Everybody's back at Wall Street, at their desks, doing what it is that they're paid to do to generate returns. So that's the point, is that if Bitcoin's upside and Bitcoin's 40% or 60% or 80% or 200% that it's going to generate on any given year, as it does during these cycles, it happens 8 to 10 days out of 365 that it trades. This is when you make your money. You make your money on little dips by stacking as often as you possibly can so that you're there when that God candle hits, when that 11% up day hits. And I'm telling you right now, those are coming in September, October, November. They're coming because all the money's going to be coming back. Sell in May and go away will be over in late August and September. And we'll see the price action get back to where we think it should be based on the differences in the structure associated with Bitcoin right now.
I just think it's, people have to write stuff. So, they're writing articles every day. There's nothing to talk about other than this meaningless noise. But if you look at a market, right, there's a lot more to Bitcoin than speculative increase in price. There is another narrative. And so if you have a lot of outflows in speculative interest that, supersedes the inflows of long-term store of value, then you're going to have downswings. You're going to have volatility to the downside, right? But show me another asset class, show me another instrument that has as much potential upside as it does insurance value. That's the unique nature of this, right? Is that it can provide it's best in class on both of those fronts, right? If I'm a speculative investor and I want to go seek, 10x gains, Bitcoin's over the last decade been the best narrative to jump on board on that. There's nobody that could argue if you had just bought and hold over the last decade at pretty much any point in time, you're doing really well from a speculative investment perspective. Conversely, if you are uber wealthy and you have to have a hedge against inflation and you have money to place in every bucket, it did its job during that period as well on those bases. So the question is not whether we're going to have downswings. Of course, we're going to have downswings, but it doesn't mean that long-term hodlers aren't being added to the books at the same time, right? And so over time, what are we seeing? Well, we're seeing the shuffling of the deck. We're seeing weak hands give it to the strong hands, and over time, that's been the kind of continued theme of Bitcoin's existence: is do you get shaken off, and do you hold? And so these people talking about all, like Andrew said, it's the market's crashed and stuff. I mean, come on, give me a break. We're at $60,000+ a coin. I mean, it's just a joke to be saying that. Yeah. And if you do look at the volatility swings off the mean, they're getting much smaller, which is another indication of a maturing market.
Yes.
So all these things to me are just nonsense that people want to, get headlines about. It reminds me of saying Coach Brown used to tell us on the football team, you'd playing at Texas, you would win 10 games a year. That's kind of what the standard is. And if you go on a 5-game winning streak, a bunch of 18 to 22-year-old kids start thinking they're hot stuff and they get too big for their britches. And he used to just pound this into us every day. If you believe all the good stuff they write about you, then you have to believe all the bad stuff. It's better not to believe either. Just do what you know is right or that you have conviction about, and let the chips fall where they may. Let the results work out themselves.
Yeah, and I think it's a great thing you brought up there. The volatility, because that was something I've been talking about since I got into the space back in January of 2017. Was this idea that especially at that time, it was still talk of Bitcoin as currency. And I was like, listen, That may happen at some point in the future, but it's going to have to become a lot less volatile in order to do it. People, if given another alternative that's not quite as volatile, they're going to take that because, you don't want to get your pay one day, and one thing, and then the next day it's, 30% down or something. You don't want that. But, I said, as the price matures, as the price gets higher, what we're going to see is that volatility should, as you were just saying, we should see it kind of come in because as price gets higher, you're going to have a different type of person coming in, somebody that doesn't buy and sell at every move up and down. Again, as you guys were talking about earlier, it becomes, it moves beyond speculation into this other thing as well. Because, even in 2017, let's face it, Bitcoin is basically just speculation, right? Meme coins right now, for the most part, all those kind of things, it's speculation, guys.
Mm-hmm.
And that being said, I know Andrew posted a tweet here talking about BlackRock. Some of the sources you talked about BlackRock there, doubling down on scale of Bitcoin ETF inflows in 2025. And some of the points you put there were 100 billion surpassed in 2025 for the Bitcoin ETF segment. BLK source, did you notice Kathy Wood, her move? And then this is where I want to kind of get to. Sources expect Bitcoin to lead 10-1 versus Ethereum ETF inflows. And that I want to kind of talk about for a minute because, we just heard that, okay, well, first we got the head of the SEC's cryptocurrency enforcement division stepping aside.
Mm-hmm.
We had the quick flip last month with the initial ETF approval, first step in, S1 still coming. And then we had Gensler just the other day, right prior to your tweet here, mentioning, hey, it looks like it'll probably be maybe July 2nd when we get, when we approve these S1s, which, by the way, I think Bitwise was the first one yesterday that updated their S1, if I'm not mistaken.
Yeah, that's correct. So some backstory to that tweet. You're pushing out to 2025 and the bullishness at BlackRock. You would imagine that they have real cause to be bullish because they're now the biggest Bitcoin ETF on the planet. They took that over from Grayscale about 3 weeks ago. And it's their most successful launch of an ETF by a factor of 10. But their theories basically are, the segment, the Bitcoin ETF segment, it's changed a little bit based on price over the last few days. But we're talking about there's already $55 billion in assets across the segment already. So getting to 100 billion in effectively double the amount of time that they've gotten to 55 is not even really that meaningful of prediction. It makes a decent headline in a tweet because 100 billion sounds like a lot, but we're already at 55.
I would argue that a little bit, Andrew. I think that if you look at the heavy holders of the Bitcoin ETF, for example, they're the same players. They're Bitcoin maxis, man. They're all the same firms that have been in it since day one. And so I do think that, this initial push that we've had is going to be followed by a less steep curve of adoption, a more ground and pound time type of an effort. But that's what's exciting about this, because before the ETFs, there was no central force of marketing effort behind Bitcoin. Now there's 8, 10, however many there are. But Bitwise, how much of a parade are they doing right now to promote Bitcoin ETF?
Yeah.
Who in the past has taken that mantle on and spent their own dollars to do it, other than BTC Media once a year for the Bitcoin conference, right? Nobody. That they're the only entity on the earth that have had that concentration of dollars being spent to promote Bitcoin directly. I think that the adoption's going to be fantastic, and more people will, but I don't think it's fair to compare the initial 120 days of adoption versus kind of the long term, because I think they're two different support groups. I think the people who have bought into the ETFs, I mean, I've heard a lot of them on podcasts and stuff, guys like Fred Krueger, right? Fred has a lot of regular Bitcoin he talks about. So he believes in self-custody, but he also believes in supporting Bitcoin as a whole, which means you got to buy some ETFs, right? So it's like this new money versus old money coming into the system. And I just am extremely confident, based upon the people at the helm, that new money will continue to find its way into Bitcoin in the ETFs. Like a lot of people are spending a lot of money to make that happen. So, it's just over time, that's going to be a rising tide. And what's great about that is it's further reducing supply. So with every day that goes by, with every marketing dollar spent, there's an ETF Bitcoin being put in a retirement account somewhere that's not going to see the light of day for a very long time.
Yeah, it's also the commentary for BlackRock was also based on market structure too. And so market structure says this. It says that in the third and fourth quarter of even this year, there's going to be funds, there's going to be institutional money playing catch up associated with the performance of the Bitcoin ETFs. So everybody that took a position very, very early in Q1, they're going to show enormous returns based on those positions. So internally, those funds that bought early will chase their own returns, and then all their competitors will chase their returns, which again will generate more buying into those. On top of that, though, if you get a move, as we've seen post halving, 6 months after post halving, you can go to the last 3 and you see it every time. Say we get a move above 80K in Bitcoin. Well, that in and of itself turns the amount of money in Bitcoin ETFs up by 40%, right? Because the price is associated with the amount of assets associated in the Bitcoin ETFs. So getting to 100 billion is just it's borderline a layup, but people don't think in those sort of they don't think that way. So the masses are thinking, well, there's 2 sections of the masses, people that are huge Bitcoin fans and Bitcoin ETF fans, and we love it. But even that group they're not sure what the asset levels that are already in Bitcoin ETFs. Then there's another group that's like, we're kind of anti-Bitcoin. There's not as much demand as people think. They certainly don't know how the asset levels that are in the Bitcoin ETF. So when I talked about this on Scott Melker's show the other day, even he looked it up and he was like, whoa, there's $56 billion in the Bitcoin ETFs. That's a big number, right? Most people would say, well, it's just, it was just a rotation out of the Grayscale ETF, Bitcoin ETF.
Well, and some of that is true, though. I mean, but I would agree with you. Nonetheless, the number is staggering, regardless of what it is. Like, it's too big. You're starting at too big of a whole number for it not to be impressive.
Well,
regardless
the Grayscale rotation was only 10 billion.
That's what I mean. So you're talking about, let's just take all the discounts, like old money and all that. You're still talking about the most successful ETF in the history of the mankind. So it doesn't matter is the point. It's a distinction without a difference.
The other point that was made was, again, the continued divergence between when the ETH ETFs are approved and what kind of money will inflow into that product versus the Bitcoin ETF product. And that was the point that you're making there, Chris. Yeah. And the conceptually, the way that it was talked about is, in the short term, in the first 6 months, there's going to be a much more heavy lift because of the nature of Ethereum and the story that needs to be told, and how do you understand that story as an investor. And while that story is being figured out, you have Grayscale with $11 billion of Ethereum, and there's going to be a portion of that that's going to be flushed. And it's going to be sold, right? So let's say you get 4 billion of that 11 billion that gets, that gets flushed, right? So the question then becomes, when you're having continued conversation around crypto ETFs, the default is going to be, well, I kind of understand what Bitcoin is, so let's start there, right?
Well, so, I don't think it's either an or. I think it's an and both. It's not an or.
Yeah.
Or, because here's my point behind that. Remember how we've been talking about Bitcoin being the base layer, right, of value? Well, I don't know who it was, but I saw an article that came out yesterday about an ETF that's going to be launched that's going to be proportionate between Bitcoin and Ethereum based upon their market share, their dominance, right? So it'd be like 70+% Bitcoin and 20+%
Those
Ethereum.
hashtags came out with that. Yeah.
Yeah. So what is that doing? Well, it's bringing Ethereum with Bitcoin. It's basically going, okay, you know what? Diversification is a good method. No one can argue that. So am I better off holding just a pure Bitcoin ETF, or am I better off holding a Bitcoin / ETH ETF that gives me exposure to both, but proportionate to the market share that they hold? That's a pretty hard argument. Like, I think we're seeing the argument that Bitcoin will be the base value layer against all future ETFs, especially ETFs that are crypto centric. And if you take that and extrapolate it down, kind of it's going to be hard to launch ETFs at scale across all the crypto initiatives that are out there without a high degree of failure, right? So let's just take, the wildest thing that you could think of. Bored Ape Yachts are going to launch an ETF, right?
Mm-hmm.
Well, if you did that with enough Bitcoin backing the ETF, it might be a decent play, right?
Mm-hmm.
But Bitcoin would have to be in there, or it would look ridiculous from a risk perspective. I think we're about to see the mother of invention, right, come out. The necessity of different products really come to the forefront. We're going to see all sorts of varieties and mixtures and combinations of crypto being formed into ETFs. But I do think that the precedence will be that you got to have Bitcoin as a base layer of value, or you might as well just buy the meme coins directly,
Yeah, I think that makes a lot of sense as well. When we're looking at it, and because as you point out, it's extremely risky, right? Anything else? I mean, Bitcoin itself. Let's face it, Bitcoin itself, it's just still risky, right? I have trouble even when I say that, because up until the pandemic, I would have been like, well, compared to stocks and whatever. But pandemic came in, and we had meme stocks, and we have all this craziness going on. So I can't even really use that as a base kind of understanding anymore. But, generally speaking, there is a level of risk, getting involved with anything, and then getting involved with Bitcoin. But man, once you get from Bitcoin and you start dropping off Ethereum, okay, it's still a significantly greater risk, but not anywhere near as, say, jumping to Sol, or heaven forbid, Bored Ape Yacht Club, or I don't know, Bonk, or whatever it happens to be coming on there. So yeah, I mean, I agree. I think that if you're going to launch an ETF in something, some kind of other crypto, I think it probably makes the most sense to have it weighted with Bitcoin, and obviously have that greater weight toward Bitcoin. So that way, people come in, they go, okay, listen, I'm willing to take on some risk, but I'm not willing to, just kind of throw all my money in there and go, hey, YOLO, right?
Well, what it does for me is it lets me go, okay, if I really am a believer in Bitcoin, right? Let's say hypothetically, I think it's the end all to end all, and there's really no reason to hold any other ones. I'm a maxi to the nth degree. Well, it allows me a free swing for the fence, because whatever losses, let's just say I am in a Bitcoin ETH ETF, and my heart tells me the ETH is going to be killed eventually, or it's not going to be valuable like it is now. Well, it's a free swing for the fence, right? Because if I'm wrong, I make a bunch more money than I expected. And if I'm right, Bitcoin's gains are going to eat my losses and then some. So it's like, why wouldn't I get a free at bat? Because I might hit a base hit, might hit a double, might hit a home run. You never know, but it's not costing me anything if I'm a hardcore believer that Bitcoin could eat those losses. And, based upon what I've seen people's, commentary be, I think there's a lot of people out there that are of that belief, that pretty much we're at the very beginning stages of Bitcoin's next profitable leg of its journey, the next big bull run.
Let's talk real quickly, probably as briefly as I can manage, about meme coins, because it's there's an absurdity to it, right? There's an absurdity to it. But let's take a step back as it relates to that absurdity. I would venture to believe that a large portion of the people watching this show, have seen the movie, Wolf of Wall Street, right? Well, there existed and still exist all sorts of firms and individuals that will convince you to put money into absolute garbage that is quote unquote trading in traditional markets.
Yeah.
The OTC pink sheets,
Yeah.
that stuff still exists. That market still lives. It's a living, breathing thing. You can go buy a penny stock worth 0.02 cents, and the company is borderline not even real. So that still exists in traditional markets. So when we talk about the craziness with meme coins, and it's all so stupid and it makes us look bad, well, hold on a second, right? There is an equivalent to this stuff in traditional markets, right? I go all the way back to the movie Boiler Room, right? And what was the name of that firm? It was J.T. Marlin. Why was the name of that firm J.T. Marlin? Because it rhymed with J.P. Morgan. And what did they do? They sold garbage, right? Well, they were allowed to get away. There were structures in traditional markets where you could sell garbage. Now, at some point, you were called to task about what you said about that garbage and how you sold that garbage, but the garbage still existed, right? So while meme coins are foolish, and I don't think anybody should be involved in them, at the same time, the market for them still exists, just like the market for pink sheet stocks.
I see. I look at it even differently than that. Like, should we tell everybody that baseball cards shouldn't exist, or collectible antique cars, or watches, or collectible guns? There's a lot of things that go up in value over time, and there's a lot of risk in them. If I want to start an antique car collection and I know nothing about cars, what's the likelihood of me buying a car that I think is worth more than it really is? It's extremely high. I think that the comparison that Bitcoin maxis want to make is that it's compared to Bitcoin. It's not. It's not even close. They're not even in the same universe. It'd be like comparing an apple tree to a car. They're not even. There's nothing comparable about them. And so, but let's not throw the baby out with the bathwater. What I would make the argument that meme coins are the single greatest test that's put on any network that exists today. What breaks all the networks? Meme coins. What tests the throughput capacity? What tests the gas fees? What tests all of these things that are imperative for us to find out as a society pertaining to this code that no one really knows about. So what I really see it is a gap of knowledge. And so, if you look at the electric car companies that have gone public and raised billions of dollars that were total frauds, that didn't have any electric trucks in production, hadn't made one successful model, yet they were listed and raising hundreds of billions and all that. Well, why did that exist? Because no one knows anything about electric cars. It's really hard to verify that they're doing what they say they're doing. Same thing exists in crypto. Like, how are you going to look at each chain and have any clue what the value is? The only way is to buy a stupid meme coin, in my opinion, and buy the education value attached to that meme coin. You're not buying the meme coin. You're like buying a baseball card. If the guy hits 10 home runs next year, it's not going to be worth that much. If he hits 60, probably going to be worth a lot, and it's this. So it's all about the comparable, right? To me. And if you look at meme coins, they're a digital collectible. You think they're more absurd than Beanie Babies? No, they're not more absurd than Beanie Babies. Beanie Babies are much more absurd, and I'll tell you why. Because Beanie Babies, in order for me to sell, I have to ship it to you. I have to meet you in public and let you smell it and make sure it's not smelled like smoke. And I mean, digital collectibles is what memes are. And if you are successful in your quote, distribution of those, then you have a lot more staying power than if you're not successful. And that's true of everything in life. If you focus on the short term, you typically end up being a short term.
Well, and here's the other thing too. Wall Street is, and this is not something that's talked about, in the world of meme coins, because they're focused on, staying up for 48 hours and trying to catch the next airdrop, blah, blah, blah. Right. But Wall Street is studying the process by which meme coins are created, the process by which value in almost an instant can go from 0 to 100 million to $1 billion. They're absolutely studying that. So the likes of Citadel and BlackRock have filed for and put lots of money behind a competing exchange in Texas that is probably going to be the first tokenized real world asset type of exchange that will probably focus on the creation of fast and instant wealth. That we'll look back 5 years from now and we'll see parts of that structure of how, wealth creation happened. And Tillman and I and you will sit here and say, wait a minute, isn't that kind of what they did with, striking up a meme coin and then, everybody buying it and it going to wherever? Isn't that part of what that structure kind of looked like? And so, yeah, I mean, the reality is there is some interesting parts of this story where, the sort of, green shoots of the adjustments to the traditional markets start in the crypto space.
Well, and listen, you tie it to the traditional markets on this last week and Roaring Kitty's podcast, right? That is a phenomenon. I tuned in and I didn't know who Roaring Kitty was before that movie or the Netflix thing came out. And it's fascinating. It's like a social experiment at its finest. And, I subscribe to a couple of meme coin rooms, like, crypto spaces. And I do that because I learn stuff there that I haven't heard before that is so foreign to me. It's valuable information because I wouldn't have ever seen it that way before. And I'll give you a good example of that. Meme coin guys that are hardcore meme coin guys, they have a value proposition. A lot of them are not thinking about the money, which blew me away. The most pure leaders in the space, the Roaring Kitties of meme coins, they are looked up to because of their knowledge of memes, which is insane to me. I didn't even think that was a valuable skill set, but that will get you as a leader. So when they get up in these spaces and they go, guys, you can't argue with Pepe. Look at what Pepe's done on Ethereum. Pepe is a brand. Pepe is Coca-Cola of memes. Pepe. And so they have this conviction within them that this character Pepe has innate power to last, to be a part of society going forward. And that's really what they're betting on. Like from the people that I've seen, that's a really different mentality than which one are we going to pump next? And maybe I'm being deceived. Maybe that's what they're thinking about behind the curtain, but that's not what the hundreds of thousands of people that are following them are thinking. The hundreds of thousands of people that are following them are thinking that they're buying Superman comic book #1.
Yeah.
That's really what they're thinking. Like, I just bought something that I'm going to put in a plastic sleeve, stick in my garage, and it's better than any lottery ticket I ever could have purchased. Like, that's the way most of those people think. So, I think for them and the purpose of educating them on crypto, educating all of us on the chains that each one, because go buy a meme coin on Ethereum and go buy it on Solana. And whether you lose or gain money on, quote, the appreciation of those collectibles, you absolutely will walk away learning something, period, the end. Something that you've never learned before and nothing else could have taught you other than your firsthand experience in that. So,
and we wonder why people are bored with the price of Bitcoin. Here we are talking about meme coins and the roaring kitty of meme coins and the reasons why. And there's layers and layers and layers to this stuff. Not only layers that are fascinating, but layers that can relate to traditional finance and the adjustments and changes. Listen, it used to be T+3 in traditional markets.
Right.
In other words, you'd make a trade and you've got 3 days for that trade to settle before you have access to that money. Well, now we're at T+1.
Yep.
Well, a big part of that happening is associated with crypto, the ability for you to move money instantly. You're not going to convince me otherwise. And at some point we'll go T0, right? We just will.
Instant.
I bring it back to Bitcoin and say, oh, okay, Bitcoin's languishing at 65K, and that's more. That more has to do with perception and emotions and being in a silo that is crypto Twitter than anything else.
Well, the meme coins I'm waiting for and looking for are so again, everyone has a hard time dividing this baby up, but what we're talking about is the blockchain, right? The blockchain has lots and lots of use cases, tremendous amounts. Bitcoin has done something as a use case that no other coin has done, and I would argue no other coin could do. I think the bloom is off the rose. I don't think you could start another Bitcoin again and it be what Bitcoin is now, right? And so that's the store of value narrative. Like that's what people are. That's what Larry Fink is creating products around, is this store of value. So if we believe that's the future destination, we should think that the volatility is going to go to practically nothing. Because that's what's going to be required. If you have leveraged products off of the base layer, the base layer has to be incredibly stable, is the point. So then you have to say, okay, well, if Bitcoin is that, then let's accept it and deem it to be the king of that. And let's build all these layer twos around this base layer, right? But then you say, okay, what's the best chain for transactional throughput? Well, it isn't Bitcoin. Bitcoin settles literally by definition every 10 minutes. And if it's not 10 minutes, it's working to get back to 10 minutes. So, that's not a transactional, that's not a coffee purchase type thing. And Lightning would be, what they're trying to do to solve that. I don't think that Lightning or any of the layer twos are going to solve that issue. You know what I think is going to happen on layer two? Real world value. What do I mean by that? Well, what if Disney launched a meme coin and you couldn't spend dollars at Disney? You couldn't buy characters. You couldn't subscribe to Disney Plus. You couldn't do anything inside the Disney ecosystem outside of spending the Disney dollar. That's happening. That's going to happen. And why is that important? Well, because now you have a bunch of derivative denominations that hold some relative value to the US dollar that can be spent in these ecosystems that people find value in. So if I'm a Solana guy right now, why would I buy Solana? Because there's marketplaces that I want to participate in that don't exist anywhere else, like the Solana meme coin markets. And you've seen what's happened in there. So Solana is the digital example of a meme coin environment that has value within the digital space, but no real world value. What happens when the real world value takes precedence? Because the data, the transactional data that's attached to having your money or your company's goodwill on a blockchain is so valuable, you're not going to be able to avoid that and know your customer like all your competitors do if you don't implement that. So it's going to happen. So I think layer twos that will really dominate are going to be branded to companies and corporations that allow you to do things inside of their world and their ecosystem that you don't get to do otherwise. And we're already starting to see that with, like, who's that singer that came out with the meme coin Mother of something?
Iggy Azalea.
Yeah. She's already doing that. You can't buy a certain line of merch that she has unless you buy it with the Mother coin or whatever. That's going to happen. And here's where I think it gets really interesting. You ask yourself, why has Taylor Swift not done something like this?
Mhm.
She has the most loyal following base that I've ever seen in my lifetime. I'm sure the Beatles and all those people were before me were like that, Elvis, but she has that type of star power, right? When someone inside her camp teaches her how to make her fans rich with this technology, that's when she'll implement it. She doesn't need to become rich off of it. She doesn't need to leverage it inside of her brand. She's got the rails set and it's making money for her, doing exactly what there's no reason to risk anything. But she cannot right now make all of her followers rich with any mechanisms she currently possesses. Blockchain allows her to. Why? Well, she can just distribute it to all of her fan base. She could literally create a Taylor Swift coin tomorrow. If you're a subscriber to her Taylor Swift fan club and you have an email address, you get sent a QR code that allows you to airdrop Taylor Swift tokens. Then you launch exclusive lines of merchandise and maybe discounted or exclusive concerts that you can only go to if you own that. And before you know it, all these people that got airdropped this Taylor Swift token for free, the value of those, because of the real world value within her ecosystem, gets driven up. And now Taylor Swift has made 100 millionaires inside of her base, and 10,000 10,000aires. And she's gotten all this wealth put into her ecosystem. And the goodwill, can you imagine as a star, if you make all your fans wealthy or a lot of them wealthy, can you imagine what you'd do? I mean, what kind of status you'd have for them? It'd be unparalleled across anything that we've ever seen before.
Yeah. And all this, I mean, we were all sitting here going, oh yeah. And I know there's people listening in and going, holy crap. And they're getting it. Like right as you're talking about, they're like getting this, something they hadn't thought about. Right. But the reality of it is this is not even new, right? This idea of a specific type of currency to do a specific thing within a brand, right? We can think back. I think at least Andrew and I are old enough to remember the old arcades, right? Where back in the day you actually would use money, use dollar, quarters, whatever. And then they moved up to where, okay, now you had to trade those dollars and quarters and whatever in for whatever token.
Chuck E. Cheese token. That's right. Or showbiz. Exactly. I love me some showbiz. Showbiz was good stuff.
And so now we get to this point. All we're talking about is, and then they get to, they've more, the last 10 years and whatever, they've gotten into the electronic cards. But the reality is you can't go in with the dollar bill. Well, I don't even think the games pay $1 anymore, but you couldn't go in there and stick them in the machines anymore. You have to trade it for whatever currency they're using. And all this is doing, all what Tillman's talking about here is just expanding that universe, expanding the idea of, listen, now it's not just play games. Now it gets really interesting. Now
it's now you get to go
and everything.
Well, now you get to go into that data set. If I clean out a drawer in a slot machine or a game, and I've got 50 $1 bills in the drawer, right? I know I made $50, but I have no idea how I made it. I don't know how quickly. I don't know, whereas if I have a credit card with all that data comes back to me. What does it tell me? Well, it tells me that there's a level of addiction with every game where people are just sitting there scanning it disproportionate to the money it's costing them because they're addicted to the game. You can't get that data unless you deploy this type of a system. So when you're talking about AI and how it's going to take over the world, imagine plugging AI into a Dave and Buster's network and having all of that data from every scan tell you where every machine should be in the layout of the store, every hot day, special holiday that you should run promotions and what those promotions should be. Like with that data set and AI's capabilities to run infinite scenarios or extrapolate a lot of scenarios against that data, it's like gambling companies when they're setting lines now. They can set those lines with such a high degree of success that they know they're maximizing the square footage against their return value. And that's what AI is going to do down to the most granular company. Now, obviously the companies at the very top, like Dave and Buster's, and that have, national reach, those are going to be the highest deltas, because how valuable is that to a public stock? If you as a company have a data farm that has the capacity to run those scenarios for Dave and Buster's, and you have the know-how to extrapolate that data and process it, what can I charge for those services? Well, it isn't a market. It isn't a cost plus. It's a market minus pricing structure. It's how much money am I going to save you or make you? Oh, I'm making you an extra $40 million a year in net profits, and that's multiplied against your stock price of X. I can figure out and back into how much this is worth to you. And I can come up with a pretty rich schedule to extrapolate those fees in order to get you there. And here's the hard part: when there's a scarcity of processing power that we haven't even scratched, fast forward 10 years, this will be the most highly desired piece of equipment on the earth, and it's just going to go to the highest bidders, right? It's going to go to the people who will pay the most, and you're going to be a slave to paying the fees in order for your business to be in competition with your competitors.
Yeah, man. I think, I think this is a great conversation. This is a great kind of extension of what we were talking about last week when we were kind of just, starting with the Bitcoin miners and how, of course, that's even from Bitcoin as a base layer, and then Bitcoin miners and how they're getting that convergence with AI and diversifying into AI, and kind of leading into, again, I guess I'm just going to say this again, guys. Same thing I was saying last week. Same thing I keep saying is, if you're in Bitcoin and you're only thinking about Bitcoin for Bitcoin's sake and the price, I mean, you're going to make some money with that. But I think if you're looking to really go, where's the wealth? And you're thinking, oh, I have to go chase shit coins to get that wealth because the Bitcoin price is so high right now, I'm getting so little of it. I think if you move beyond Bitcoin for Bitcoin's sake and understand it as that base layer, and you see this conversion of AI, and you see these things that we talked about last week, these things that Tillman's doing a great job talking about this week, I think really that kind of brings the narrative back to Bitcoin, right? Because now Bitcoin is this creator, right? It is the God. It is the creator of wealth as that kind of that base layer there.
I'm going to go one step further and say something really controversial.
Oh, do it.
We don't need Bitcoin's transactional network anymore for it to be what it is. We could shut all the Bitcoin miners down tomorrow and create a layer 2 that isn't proof of work, that's just for the means of transfer. And we could quit this arms race to the highest hash power, which is going to fail at some point because we're competing with AI. And we could take back the network in a way that, all we need the Bitcoin miners for are really for the inflation curve. That's the unique, that would be my take, is the most unique quality to the chain. The unique quality to the chain for me is that it was fairly and equitably distributed from the first Genesis block to now, to anyone who wanted to contribute to the network. So it's as close to a community chain as you're ever going to get. There's no, you could make the crazy argument like Satoshi had an advantage. Well, he didn't really. He put it out for public consumption before he mined the first block. Yep. Yes, he believed in it at a higher level than anyone else at that time, but that's why he was rewarded, right? And so there's this notion that all chains are created equal. Well, in order for us to create another public chain that's fairly and equitably distributed on the back of proof of work, we need another 15 years to get to where we are in Bitcoin. And why create another one when we got one? So it's the clear winner on that level. But then the next question needs to be is when you were burning X number of KWs 6 years ago, was the value of spending that electricity justified based upon the aggregate value to the network that you were providing the world? Absolutely, because there was no way other to fairly get the Bitcoin out.
Yeah.
But now that 90+% is out, you just have to keep it safe going from peer to peer. You don't have to have, like, we've lost more in Bitcoin than we have left to get. Sounds like we're at what I would call substantial completion or meaningful completion, right? Where we've done on the back of proof of work what's been needed. Now the question is it's a base layer. It could be held in cold storage. It could be transferred in any number of ways other than proof of work. And when will that happen? And what will be the catalyst to make it happen? And I would argue that the catalyst of making that happen is going to be the scarcity of resources attached to the competing needs with AI. Like that is where the pinch point will inevitably hit the fan.
Yeah. And I love that, man. I love it because what it means is Bitcoin's still relevant, right? It means, you don't have to worry about the mining part of it because, as you mentioned, we've lost more than's left to actually be mined. So, we could theoretically shut down the mining today and we've got it out there. And then it just becomes, okay, again, like you were mentioning, it's just about the transfer. And I think that's really a great thing when you think about it, because a lot of people are like, okay, so I'm investing in Bitcoin. And again, they're still focused on Bitcoin for Bitcoin's sake, which means they're focused on price for price sake. But when you remove that, when you look at it and go, well, will it survive if, let's say, we have some long-term recession or, heaven forbid, even a depression? Well, 10 years ago, when we were 5 years in, maybe not. But at this point now, we've mined almost all of it, right? Basically, and we've got all these things that are starting to happen from it. So I think, we're at that point, we're at that peak point there where we kind of say, okay, Bitcoin's kind of here to stay. And even if we were to have some big kind of, again, heaven forbid, some kind of depression or some longer term recession, Bitcoin has gotten to that point where it's here.
Too much value is in it for it to go away. You're 100% right on. Even if, like, the two scenarios that I think are the most highest risk to Bitcoin is SHA-256 getting cracked, right? We lose the encryption value of the network, which would be a crushing blow, and headlines would, say the end of Bitcoin, blah, blah, blah. That still wouldn't be the end of Bitcoin. Why? Well, because even if the network, the SHA-256 is cracked, that still only lets you go back one block with a ton of power, and you're going to change that one block, and we're going to know that you changed it, and we're going to go, well, that Bitcoin doesn't count anymore, and the person you stole it from or people you stole it from have a redemption code onto this new network that's not SHA-256. You just basically go back to the purest point of the ledger, and you let all of those wallets claim the airdrop of the new conversion coin that's not on SHA-256. And then you have the existing perfect ledger now being carried forward on a different protocol. You could easily do that, and that would literally be the most catastrophic event that I could see taking place in Bitcoin. So it's like land. The best analogy I've heard since day one is like the New York land, Manhattan Island, right? Yeah. You may buy Manhattan Island property 100 years ago, and guess what? You will have bought it differently than the people buying it today. You won't have a paper deed. You won't have gone down. Like, the process will continue to evolve regardless of how you do things, but you still are going to own the Manhattan land, right? You're not going to you may have to convert it to a digital deed because you had the old paper deed and they're on a digital, but it's still going to be the deed. You see what I'm saying? And that's where I think, the value of Bitcoin really lies, is the fact that it's already been distributed in a way that's been perfect for 15 years. And that's never been done.
Yeah, I agree, man. I think, again, when I came in 2017, I wasn't the same kind of proponent of Bitcoin that I am today. I came into the market saying, listen, I'm a trader. I trade. That's what I do. though I still figured there might be some chance here. So I've got, a bag sitting there that I don't touch, because as being involved in markets for, so many decades, you take chances where those opportunities seem to present themselves. But getting up here, again, I think I mentioned this not too long ago. I haven't been more excited about Bitcoin than I've actually been the last few months this year. And then especially the last few months here, just with the possibilities when you get beyond Bitcoin for Bitcoin's sake and, which leads to price for price sake, when you get beyond that, that's, I think, where the real kind of aha moment begins, right? You've got a lot of Bitcoin maxis out right now that are still just focused on Bitcoin for its own sake. And of that, price is a big thing because you have to have the price rising to get more involvement. But that more involvement brings that next part, the part you really should be looking forward to and looking beyond.
Well, that's what's so hard about the tribal nature of this industry, because you talk to anyone who hates Bitcoin, and it's because they haven't made money on it. And you talk to everyone who loves Bitcoin, and it's because they have made money on it. And it's the same logic applies across every single one. You go to an ETH head and you're like, hey, why do you love ETH so much? They can give you all the song and the dance. It's the best smart layer. But the truth of it is, it's because they've made money on it. That's the only reason why they care about it, because most of the people out there don't even understand the protocols. They just are believers in them because lots of other people have adopted them and they've made money on the tokens or on the coins. So yeah, it's not real. Most people aren't making decisions that are logic based. They're emotional decisions. It's like, I'm a Solana fan, so I've got to be the Solana fanboy. That's not a mature market mentality. A mature market mentality is your mentality, Chris. I have no emotion. I'm here for the trade. And guess what? What you just articulated is that you were here for the trade and you found an investment, because an investment is different than a trade, right? An investment is something you just park. You just keep putting and parking and parking. Yeah. And the store of value narrative hit home with you, or you wouldn't be doing that, right? That's
exactly. Or you keep putting in if I didn't think it was going to, if I thought I was going to lose money over the long term.
Or that it didn't provide you diversification inside of your overall portfolio, right? If it wasn't serving a purpose for you, you wouldn't have it.
Exactly.
And that's, I think, where everybody's going to eventually get to, because it's going to be a very useful thing to have. There will be things that you can participate in that you can't otherwise get.
Yeah. Yeah. Man, absolutely fantastic conversation, guys. I think maybe I'm biased here. You guys let us know, hit the like, subscribe, follow us. Make sure, that the Twitter handles are underneath the video here, AP_Abacus and Texas OL61. And of course, TX West Capital. Follow us. Let us know. Leave some comments, guys. But, again, I may be biased, but I think these shows get better every week. I think if you came in on the first show, really focused on Bitcoin and Bitcoin price, okay, it is what it is. But especially these last two shows, if you haven't really started to think beyond that and think about the possibilities and start questioning your thought process about taking extreme risk, hoping that a meme coin or a shit coin really in general outperforms Bitcoin and continues to do so. They'll do it at periods of time, guys. They will. But when you're comparing the two over a long period of time, if you're not maybe looking at this now going, okay, maybe it makes sense. Listen, I'm not fully buying into just Bitcoin, but I'm going to put some money into Bitcoin. I'm not going to touch it. If you can get there, guys, I think you are really kind of setting yourself up for a lot of great potential there in the future here. So,
and when you're evaluating the altcoins or whatever you want to call them, right? When you're evaluating things that are highly speculative, that are more collectibles than anything, the first question I ask myself is how much real world tangible value has been put into this, right?
Yeah.
So Bored Ape Yachts is a very, very unique example of no real world value and a unique original brand being created. Now, I will tell you that I think that a lot of the the celebrities that got behind it and endorsed it as them owning one was the transfer of real world value into that project. But the next iteration of layer 2 or altcoins, whatever you want to call them, is going to be the transition of actual tangible real world value into those tokens. And that to me is where you're going to start seeing, quote, the men separate from the boys. Because speculation as to if Disney launched their own token, what's the probability that they're going to fail in their initiative?
Yeah.
Versus, some no-name developer that's had a couple of hits in the crypto world. Like that'd be a project I'd get behind. I'd be going, I can go to Disney World with a 50% discount if I pay with my Disney dollars. Sign me up. That's what's kept me out of there.
Yeah, well, real quick, I think we got to go here. It's been about an hour, but I had one more question here. Mr. Smith was asking here, what would happen if wartime accident took out a giant miner facility in China? And if I'm not mistaken, the U.S. still leads the world in mining. Bitcoin, I think we're like something like 25 or 26% here recently. We've kind of put up there. So, I mean, I don't think it does a whole lot of anything.
It does nothing.
Yeah.
Zero.
It does nothing. There you go. The man told you.
And I'll tell you, it does. It has an immediate advantage to all the other miners because now they're going to get a better block reward or they're going to get more blocks under their transactional throughput. So they're going to make more money. But what the more interesting thing, and I'll leave you guys with this to think about, the S19 Antminer and its equivalent on the 3 major manufacturers, those are 4x the efficiency of the previous version. Okay. With this halving that took place, the S19s are not profitable anymore. They're a paperweight. The new ones haven't been distributed or launched yet. The question is if the new versions have already been created, which I know they have, who's mining with them right now?
Yeah.
And I would answer the question for you. It's the manufacturers.
Yeah.
So there is a lot of concentration risk. Like the heaviest risk to miners is that those 3 manufacturers decide not to distribute the next iteration. They just all go, you know what? Let's just all plug these in ourselves in China and let's control the hash rate. And so that would be the biggest risk. And that's why we need to diversify our manufacturing efforts. But nothing would happen if a big mining facility got taken out other than block rewards proportionate to everyone else would go up.
I love it. Well, hey, listen, we appreciate you guys tuning in as always. Keep coming back every Wednesday, 11 a.m. Central, 12 p.m. Eastern. Follow these guys. Follow me on social media. Again, lots of information we put out there and whatnot. And, Tillman tries to continue week after week to convince us that he's ugly or pretty or whatever he may feel that week, right? You can see that Andrew does not agree with the prettiness, but anyway, hey, listen, we really enjoy you guys joining in as always. Do me a favor, share this if you guys, jump out. It takes 2 seconds to do so. That helps with the algorithms and getting the information out there and kind of getting us in front of more faces. We appreciate you guys joining in. We appreciate the questions and the thoughts. And, week after week, we're going to continue to try to make this even better and hopefully expand the way you look at it. And not even just with Bitcoin guys and Bitcoin miners and all these things, but just with markets and investing and these things out there that really can give you, everybody's looking for that edge, right? Well, the edge is how do you look at it in the future? And it always goes beyond that thing as it is, rather what it can lead to. So there it is, guys. As always, we appreciate you joining in. Hopefully we'll see you guys next week. Also, check out underneath here, go to thearchpublic.com. That's these guys right here. That's their company. Check it out. And of course, you can check us out with our group coaching over there at the TWC Trading Academy as well. You guys have a great weekend. Y'all trade safe. Andrew, Tillman, thank you guys as always for just enlightening minds here and sharing thoughts.
Love it. A lot of fun, Chris.
Absolutely fantastic. I love this, man. This has got to be my favorite time of the week, honestly. So really glad I kind of did that thing that one Friday and said, hey, let's do we should do a Beards and Bitcoin show. And here we are for the benefit of everybody else. So that's it. You guys, everybody, have a great week. Y'all trade safe out there. Don't forget U.S. markets closed today. It is Juneteenth celebration here. And, if you guys are upset about the stock market and everything being closed, the middle of the week, just wait till a few weeks later. July 3rd, half day, July 4th, full day. You guys have got like 3.5 days of trading that week coming up here. So good times, right?
Yeah, that's right.
Or put your feet in the grass. Everybody else is gone. So
there you go. That's right. That's right. Best advice I've heard right there. All right. You guys, everybody take care, and we will see y'all next week. Man, oh man, love this. Take care.
See you guys.